What's up guys, welcome back to my weekly reflection. This week, I'm not gonna lie, it was a pretty tough one. I ended up making money, as you can see, on Tuesday and Thursday. But as you know, I don't like talking about money because if you make money as a trader, that doesn't mean anything. Like, it doesn't mean shit, because you need to be building good habits, you need to be taking good decisions every single day. And that's the reason why I class Tuesday and Thursday as an L day on Tuesday and a midday on Thursday. Just because, as you can see already, I took 5 trades on Tuesday and 6 trades on Thursday. That's a lot. I only want to be trading like 2-3 trades max per day. And I took a lot of bad decisions and bad habits. I followed bad habits during those days. So that's why, even though I made money on the week, I am up $300 on this week on my fund accounts. I still think I could do better, but that's the journey of a trader, of course. You still need to keep improving. But the most important thing is that you don't equalize your winning days with good days. So yeah, that's something that really helps me just the last couple of weeks. So let's talk about that week. First, let's see the an economic calendar. We can see that this week we had Monday and Tuesday the most amount of news. And then on Wednesday we had no news, on Thursday we had unemployment claims, and then on Friday we also did not have any news. So just by looking at this, you can already know that Monday and Tuesday is most likely going to form the high or low of the week, just because there's the most amount of news here. So the most amount of volatility is going to be, liquidity is going to be entering the market at these times. So what ended up happening is Monday, I think Tuesday formed the high of the week. And also from a lot of nice setups here. And on Thursday, again, we had news, and Thursday was also a really good day in terms of setups. So just by utilizing the economic calendar, you can really just predict the week when you should be trading. So now let's talk about the chart. So even though I did not trade on Monday, Wednesday, and Friday, I'm still going to talk about these days because I think it's really important to just go back, analyze what you maybe could have taken in hindsight. I think that's the best way of doing backtesting. Just see where your concepts and trading strategy, model, framework, whatever you want to call it, worked out and how you could have entered. I think that's really, really nice to keep building your experience. So let's first talk about Monday. Did not take this, but I think this is a really nice A+ setup for my trading strategy that I want to talk about. So this was how the higher time frame looked at that time. So basically from last week, we displaced down a lot, and now we're a little bit retracing back to OTE of this range. Now, I'm not really looking for shorts yet until it's really, really clear, because of course we can sweep this high, which happened. So I'm just looking at where price reacted on Monday. And on Monday at New York Open, it reacted from this 1 hour fair value gap in discount of this range. Yeah. So if you go down on the lower time frame, and I'm just gonna pop up NQ right here, 1 minute. That's not the only thing, of course. Just don't trade based off an hour on fair value gap. We had 90-minute SSMT right here. So I can show you guys really quick how that looks like. The 90-minute cycles, the SSMT there, you need to be checking that on the 5-minute time frame. So let me just see where this happened. Right here. Let me put off the drawings and go back there on yes as well. Right here. So you can see that, yes, we end up right here. This is Q2 right here. We end up sweeping the low both on ES and NQ, but on NQ, we end up closing, as you can see, we end up closing a candle below, just below this previous quarter close. And on ES, we did not. So that's a hidden bullish 90-minute sequential SMT between 90 minutes of the New York session. And so we can take that with us with already that 1 hour fair value gap confluence. Now, that's also not the only thing I need for a setup. Most importantly, I need to be looking at a nice liquidity pool where we can manipulate into. And of course, we want to see manipulation inside of discount of range, so somewhere right here. And that happened because we formed a lot of low resistance liquidity right here. You have lows in the form of trendline liquidity that got taken out really aggressively, and then a displacement up happened really quickly afterwards. So this really looked really interesting because we had an SMT here, we had just manipulated these lows, and after we take out sell side right here, we're most likely going to buy side if that's the draw on liquidity, if that's the higher time frame bias, right? Just because of all these confluences, I was really bullish, but I did not end up taking anything, only after the fact I saw the setup. And maybe next time I will take something like this. So it's also below the true session open. What do we see? Also a 1 hour and minute 15 and minute 5 precision swing point. So what that means, again, if you take a look on the 1 hour time frame, we go back to here. You can see that this is a bullish candle on NQ right here. So this is the time frame we're talking about, taking the trade. On ES, it's also a bullish candle, but on the Dow, I think you can already guess it. It is a down close candle. So that's a precision swing point with this. So we have all these confluences. Just we disrespect this first bearish CB, so bearish fair value gap. And then the first entry got respected. I did not really trust it right here, but then we displaced back up again, and then we retrace back. This is a nice BPR, and then we go from there. So I think this is a really nice setup just because we have a clear manipulation of this lower resistance liquidity. We form a cracking correlation, a 1 hour, minute 15, minute 5 as well, precision swing point. So if we have these stacking up fractally, so on the 1 hour there is a precision swing point, on the minute 15 I'm not going to show you, but it's the same thing, then this means that it's a really good precision swing point, right? The fact that it also taps a 1 hour fair value gap, the fact that it's below a true session open, the fact that we have a 90-minute SMT right here, all plays a nice role. I don't like this as a really A+ setup just because we already took out the low-hanging fruit of this buy model, right? So if this was just stopping right here and not really taking out the external high, then this would be a better setup. So yeah, just saying that. So I'm not putting this in my playbooks, but it's a nice read of how you could have played Monday. At the end, Monday was also a nice market maker sell model, but I could not really find an entry. Maybe this turtle soup. No, not end up being a turtle soup. It's just equal high. So I don't think you could have played this sell model. But it's really clean though, just not with my my framework on how I trade. But let's go to Tuesday. On Tuesday, took a lot of trades, ended up making money at the end, but I could have just made so much more if I just cut out those small early losses. And a big lesson I learned also on Tuesday that I'm going to share with you right now. So this is how the price action looked like on Tuesday. Really clean again. Now what do we have on the hour 1 time frame, the higher time frame? Now we basically swept this high inside this fair value gap on the higher time frame. So the narrative is kind of bearish. So of course it's not just how I form my bias, but I just need to, this is like my first step, of course, check the higher time frame. The order flow looks kind of bearish, right? So I'm a little bit bearish biased already. Now, if we go on the lower time frame, we check for cracking correlation. Let's go to Tuesday. Where is this? What the hell? Oh yeah, I put off my drawings. So first of all, we had a monthly and an intermarket forex and an interest rate SSMT. Just don't think about this too much. I just checked the interest rate market and there's an SMT right here as well. So I take that with me on the NQ. But you can just trade fine with just ES and NQ and the Dow. This is just extra confluence. And if you want to be like crazy accurate, but just knowing, looking at this order flow, you already know that, okay, we kind of have a bearish bias, right? So at the open, we form a daily SMT right here. So how this looks like, going back to the 15-minute time frame, that's where you look at the daily SMT. So this is the high of the London session. And as you can see, yes, we did sweep the high on NQ, but we did not close a candle above it. Now, on ES, we clearly sweep the high and we close above the London highs. So that's the daily SMT, really nice confluence, especially because this happens also in premium of this range. Also because it happens inside of this 1 hour fair value gap. Just look at this fair value gap, right? It happens inside of this premium fair value gap. We have the cracks right here. So the monthly SMT, just let me show you really quick. It looks like this on the 4-hour time frame. It's really clear that on ES we close above last week's high, and on NQ we just respect this fair value gap. So that's the monthly SMT of that higher time frame bias. So just aside that, we have this daily SSMT, and just before the New York Open, let me just put it like this. This is what the structure looks like before the news at 8:30. And I mean, it's just me, but I can really spot the clean market maker buy models right now. I see this as a clear liquidity target, right? We have low risk liquidity stacking up right here. This is going to be the target where we can also manipulate and start the sell model, which happened. So this was basically a buy model and then a sell model. The buy model ended in when the New York Open happened, and then we started the sell model. So really clean. The news at 8:30 on Tuesday just manipulate this down towards equilibrium of this little range, and then we expanded up, and there we had the manipulation of New York. So if I put on my chart makeup, you can see that this news formed a 90-minute SMT and then pushed the price up. Then we had the daily SMT I was talking about. We are within an hour one fair value gap. And the order flow kind of switched bearish, right? On the 1 minute time frame, this is when I really think that everything looks ready. I made a lot of mistakes here, so I'm gonna point it out right now. So first of all, okay, 90-minute SMT pushed us up. This now becomes a data low, really interesting liquidity point we can target later on. Now, okay, this was just another small SMT that pushed price from here. And then we end up stacking a lot of lowest liquidity, right? This is a low. Also, this is a minute 5 precision swing point that pushed the price up. But that aside, here we end up finishing the market maker buy model, this market maker buy model. Then we had the manipulation of the daily SSMT, the 1 hour fair value gap. We have a minute 15 precision swing point at the top right here. So this is really indicating that this can maybe be a potential reversal. So if I just want to show you guys right here really quick, right here, this candle is an up close candle on ES, as you can see, and it's a down close candle on NQ. That's a minute 15 precision swing point. When do I think it's ready? First of all, maybe another SSMT next to the daily on the lower time frame maybe, which happened right here. We had a micro SMT, but also just when we displaced through this first minute 1 fair value gap, then I think, okay, order flow really switched bearish. I think we're going for the lows because this low risk liquidity is so close. We have the data low and we have this nice market maker sell model that I was looking at the whole day. So on Tuesday, what happened is this is the trade I ended up taking, the loss that made me money and positive on the day, but I was just not waiting for the right time. So basically I was taking a short already right here, because we already had the daily SMT. But the problem was we did not have clean structure, right? We did not have a clean drawn liquidity. Here, when we end up stacking this lowest liquidity, we end up sweeping the highs of this market maker buy model. Clearly, we have a clean manipulation. Like right here, why would I short when price is literally still making relative equal highs, right? So I was just looking for shorts here. I was targeting this data low and I stopped out right here. I think like 4 times. I just entered too many times because I was so bearish and I did not understand why price wasn't going down yet. And first of all, it's because the structure is not looking really clean yet. We didn't have a clear first drawn liquidity. At the end we had, when I waited enough, we had this lowest liquidity and I was just not waiting for the market open, right? This is when the market opened. And the first clear thing that happened is we displaced through this minute 1 fair value gap. So a really big lesson for me is on Tuesday that I should not place trades based off intuition. Like I say this a lot of times, but it just keeps happening to me, of course. That's just how humans work. The more I do this, the more I realize that this is a big mistake. I should not do this. But yeah, I should take trades based off reasons on the chart. A common quote in a trading industry is that trade what you see and not what you think. So that's my biggest lesson of this day. I was bearish the whole day, but I needed to wait for the market to open to have that nice injection of liquidity. Now, what do we see? Why do a lot of traders just only trade at market open? It's because then we have the most high probable setup. That's when time and price meets. That's when it's just finally time for the market to move. And that's what happens, right? A lot of people get chopped up trading just like before or a few minutes after the open when structure is not looking clean yet. And when we finally had the open, this looks really, really clean. Also above the through the open, above true session open, we tap this hour run fair value gap. We have a micro SMT right here because ES ended up sweeping the high again over the Dow. And then yeah, everything else is just like narrative. This looks really clean market maker buy model. We have this daily SSMT, minute 15 precision swing point. This is liquidity that you want to see before the smart money reversal. So yeah, it just makes sense, right? If I just replay it like this, why would price be ready right here? Like there's not, I mean, it could if this is at the right time and we have an SMT right here or something. But look at this hour run fair value gap. It just barely got tapped. And also this liquidity on this market maker buy model also not taken out. So if you wait a little bit, wait, I got chopped up right here. We form liquidity. Now we have a clear manipulation. This is a clean manipulation. Still, we end up displacing up. So if you end up right here, entering right here, you still got chopped up. I still got chopped up. But yeah, you should just wait for a clean minute one bearish fair value gap to get made and a bullish fair value gap to get disrespected, which happened right here, right? Bullish fair value gap got disrespected, a clean displacement. This is when I enter, right? And this is when you see time and price meet and we just immediately go towards the low, right? So yeah, that's my read on Tuesday. Sorry if I'm just mumbling a lot, but I'm not preparing anything. I mean, I did my weekly reflection already before I recorded this, but I'm not like reading any script or something. I'm just telling you what's on my mind if I see this kind of price action. So yeah, that's when the target got hit. So you should be out right there. That's Tuesday. Biggest lesson, as I said, trade what you see, not what you think. So then we go to Wednesday. Let me put off this replay. On Wednesday, did not trade. Nope, no trades. But if I could have taken anything, it would have been this daily SSMT that we got made, this 90-minute SMT, and then they have this micro SMT. So we had triple SMT and it's consecutive. So we have daily, and then the next one is 90 minutes. It's just below it. And then the cycle below 90 minutes is the micro. Then we have triple SSMTs. And then we have a stop rate right here inside of discount of this small range. And we are close towards this nice drawn liquidity, right? For every trade, you need a drawn liquidity. These equal relative equal lows inside of an 1 hour fair value gap. Clean drawn liquidity if I entered right here. But again, nothing really special. This is not really looking like great price action at all, right? It's not a clean manipulation. It's just a continuation of the sells that happened on Monday and Tuesday. But if I could have taken a trade, we had this clean drawn liquidity. Would have just maybe, I don't know. That's why I didn't really take a trade. After this stop rate, something like this. And then maybe put your stop loss to break even and let it run. Because of course it's not gonna be the move of the whole session. So you can let it run towards the external liquidity, which is right here. If you now look at the 4-hour time frame, this is a clean market maker sell model on the 4-hour time frame. And this is why the whole week we basically opened right here and we just dropped off and completed this. So this is when you know the draw on liquidity is the low. So when you have this clearer high time frame market maker sell models, and you can just literally play the lower time frame sell models to get in line with the higher time frame trend. And so yeah, this whole week we just dropped off. So it was a really nice bias. I was just bearish for the whole week, honestly. Took a lot of bearish trades. But yeah, on Wednesday it was just a continuation, nothing really clean. But this was my analysis for the day. But then on Thursday, it was really, really interesting. On Thursday, again, you can see we had unemployment claims. So a nice day to trade. not really on 8:30, but looking at it at like 9:30 at the market open. So what do we have right here? So if you look at this, we had a monthly SMT I showed you on Tuesday. We have a weekly SMT right here as well. So if you go on the 1 hour time frame, I think this was already forming on Wednesday, but I'm taking this bias with me on Thursday, of course. It's not invalidated. So if you go between Tuesday and Wednesday, you can see on the Dow, this is the high of Tuesday, and on Wednesday we just took it out, but on NQ and ES, we just don't take out the high of Tuesday. So that's the weekly SMT. And so here we had a monthly bullish SMT forming as well at that time. So monthly, you look for that on the 4 hour time frame. You can see that ES was just in general trading a lot higher than NQ. So that made this our 4 monthly bullish SSMT interesting. But why did I not take this into account and still trusted that bearish bias? It's first of all because we have this clean hour 4 market maker sell model. This is looking like a clean structure. And because this monthly bullish SMT is not yet confirmed. What I mean with the confirmation is you need like a clean displacement showing that this actually isn't a cracking correlation, right? This monthly SMT, we clearly displaced from this, right? We clearly just on the higher time frame, we displaced lower. This monthly is just giving a little retracement and we have this bearish narrative. So I'm not really trusting this until we have other bullish cracks in correlation. But that did not really happen except from this 4 hour PSP. Because of the market open on Thursday, really interesting day. We end up, again, looks really similar to Tuesday. We have a 1 hour fair value gap right here. We have a daily SMT right here. And even though these look like equal highs, there is an SMT right here. There is a daily bearish SMT. So I should not care about this. So to point this daily SSMT out, you look for daily ones on the 50-minute time frame. So let's go back to Thursday. You can see that right here, this is the high of the London session on Thursday. This is the high of the London session on Thursday on ES. And we did not go above it there on ES, but we did do that on NQ, and we even closed a candle above it. So that's a daily SSMT. We do this in the 1 hour fair value gap, and it doesn't really matter that we are not like in a crazy premium of this range. Like I don't need, like usually, like when I first start trading, I need everything to be in the higher time frame premium, but that does not need to happen because we have this bearish bias. Like we're just really bearish. If we are just above the true session open, above the true day open, which is basically premium of the time concept, then it's already enough. We have this cracking correlation. We have a PD array where we react off at the right time, at the New York open. That's when nice trades start to form, right? And so if you go on the lower time frame on Thursday, I was bearish, but I entered at the wrong time. So we had this 90-minute SMT that pushed price up, but it doesn't really hold much significance because we had this daily SMT. So we can basically delete this because this one is bigger. Now here on the 50-minute time frame, we displaced really harsh down. We had really bearish order flow, but for some reason I was still looking for longs because we tapped below the true session open. And you can see I don't really have any other clean reason. I was just thinking that we're going for the highs because this looked like equal highs. So I ended up taking some longs right here, which were not valid because, I mean, it doesn't matter if there's equal highs, if there's daily SMT, and just tapping below the true session open and having displacement, it's not a great setup, right? I just thought this was the liquidity. We go up from here. As you can see, I don't really have a clear explanation, so that's why it's not a good trade. So yeah, the shorts were more obvious because of the bearish higher time frame narrative already. But when was it ready to take a short, right? This is the biggest, not mistake, it's just a lesson from Thursday. This happened 2 times, even in the PM right here. So let me explain. When I'm looking at sell models, so I'm basically looking at, let me just delete this. This was just a clean liquidity I was looking for to get targeted. So that happened. That's really nice. But the main point I want to tell you is that, let's say I want to look for this market maker sell model to play out. Okay, we have the smart money reversal inside of this 1 hour fair value gap. We have the daily SSMT forming this smart money reversal. If price already really displacing down, and I want to take an entry somewhere right here when I didn't got in right here, then I'll look for a turtle soup, price going back to premium, and that's what I was trying to do right here. So here what had happened is I saw this high getting taken out right here, then a little bearish candle, and then I took a short because I thought this was going to be just a stop rate to again go towards the lows, because we also had equal lows right here, so it looked really clean. But I was just not waiting for the right time. This is the biggest lesson. I should always wait for price to go to the premium, if I'm shorting of course, of the lower time frame leg and have a clean structure. Here, this looks not really good. Like, we are not in premium of this whole range. When price finally got into premium right here, above the 0.5 of this range, we have an SMT, then we have a displacement, we disrespect this bullish fair value gap, then we retrace a little bit back up, we respect the first entry, which is this minute 1 bearish fair value gap, then we displace, and then I know we are ready. So then I finally took this trade, but I was just already in drawdown because of this trade, because I was not waiting for a clean turtle soup, clean displacement. Right, this is not a displacement, this is just a respection of this fair value gap, and I should have seen it and already immediately got out. So yeah, that was my mistake on Thursday. Ended up making money, but I could have just made so much more if I just cut out this small loss. But then on the PM session was an even interesting setup. I think this was even cleaner. So if you go to the PM session, we just keep dropping off. Just the whole week is just bearish setups. But then at the PM session, what do we look for? Again, I'm just in a bearish narrative, so I'll look for premium of a range to get mitigated. So I just take this high to this low. This is OTE of the range. I'm looking here for a manipulation to start the potential market maker sell model, which eventually happened. So we have this smart money reversal right here. We just really, we just go above this high and we displace really fast down. We respect this first entry right here. And we starting our way back down. So I'm looking for this drawn liquidity to get hit, because I think this is going to be a market maker sell model. And so again, here I made the same mistake that I made right here. I did not wait for premium to get hit right here. Why would I take a trade right here? I should wait for here. This looks way clean. This looks like a way cleaner retracement. And here, so I made the exact same mistake. I basically, I mean, not the exact same, but similar. I just looked at price. I saw, oh, price is just mitigating 0.5 of this leg, just a little bit. You can see we tap 0.5, we tap a minute 1 fair value gap, and this ended up being SSMT fill. So that means that ES did not tap this minute 1 fair value gap. It was like way higher for ES. So that's also a cracking correlation, like NQ tapping a fair value gap while ES did not. So that's also for, a confluence. So then when that happened, we have a displacement downwards and we respect this fair value gap. And then I just had a really bad fill right here. I just thought we're going lower. But why would I do it if I don't have a clean stop rate? And here I'm just literally chasing this sell model. So I should always wait if I'm playing these kind of reaccumulations, redistribution, I call this, of the market maker sell model. When I don't get in right here, I need to get in right here after a turtle soup. And so this is just the clean high that then got taken out. Now we have a turtle soup. Now we have an SMT. And then this is when I re-entered after this bearish close right here, indicating that this is a clean, just a sweep. And then, yeah, we just go down from there. So again, took a loss right here, re-entered right here. This is when finally you should, time and price is ready and when you should actually take a trade, right? So yeah, again, you should be out at the lows right here, even though this is also a big lesson. We are really close to the lows here on the higher time frame. We were right here. You should not expect price to go here. Like, we don't know it. Just take it off at the next lower time frame low, because you can see only on Friday we end up finishing it. So really nice of me to just sticking to taking profits early. I mean, not early, just taking profits at the right time, which is when this market maker sell model is completed. So yeah, I think this is a really, really clean setup. We have a market maker sell model, we have a stop rate, and then you just enter. You can have different ways on how you can play this. This is a little bit, I'm not feeling ready for this, so I'm putting a little bit more room right here. Maybe you can mitigate again, but if I'm playing this stop rate, I should really trust it. So yeah, but I'm just like, I just need to see it over and over again, then I can finally take these kind of high RR trades. But for now, this is fine for me. A 2R, I don't know, this was like a 3R, so that's great. So yeah, then on Friday, let me take a look. I don't think there was something interesting. Did not take any trades there, nope. But this was again just a sell model. Yeah, I indicated a potential trade I could have taken right here. Again, the same thing. If we are already like down 50% of the sell model, we're really close to the final target, then I look for a stop rate. And the reason why I took this trade is not just because we retrace back up to premium and we displace down. I need a stop rate. So I looked at ES and NQ. Let me just get Dow out of the way right here. But if you take a look at the price action on Friday, again, we are really, really close to the draw. On ES, we end up having clear turtle swoop. This is a clean stop rate inside premium, inside of this fair value gap. I mean, this just looks really, really clean. Man, why can't I select this? Inside of premium. So then I see, okay, this is at the right time. We have a stop rate on ES. I checked this, but because NQ is just a little bit higher and ES is already really close to the low, I take it on NQ because I was confident ES is also going to take out this low. So then after we have a displacement, I take it on ES after we form this inversion right here. Then I just market enter and get it out at the lows. And because it was Friday, I took it actually out at the low because I was really confident that now we were finally ready and we're really close to this low on the higher time frame to finish this higher time frame market maker sell model. So I did not, I did not take this, but if I would have taken this, then I would not really, maybe like take one contract off right here, but then maybe have a little bit more room because we're confident that this is the last round liquidity on the higher time frame. So yeah, that was my week. Sorry if this is like an unstructured video. I'm just sometimes yapping, but yeah, this really helps me to stay accountable. Maybe you guys learn also something from it. Think I'm on the good path. I just need to fix my small errors. Biggest lessons is just wait for the right time to execute, because I feel like one thing is technical analysis. You can be good at just reading price action, but if you're not good at executing, then you're not going to make money. So, not making money is not the goal. Then you're not going to be a good trader. So yeah, that was me for this week. If I go and take a look on my playbooks, this is what I have added. So it was this on Tuesday, I think. We had this clean data low. We have this daily SMT inside of this 1 hour fair value gap. We completed the market maker buy model. So we took out buy side. Now we're going for sell side, right? The market moves from liquidity to liquidity. We have a minute 15 precision swing point. We wait for the market open, 9:45, good time to trade. Displacement, disrespecting this bearish fair value gap. And now we're ready to go, right? That was really a setup that I decided to put in right here. And then finally, the one on Thursday, I think looked really, really clean. We basically retraced back to OTE of this range. We form a potential market maker sell model. So I'm looking at a stop rate that happened right here. We have an SMT fill right here with SMT. Just enter when you see the stop rate. Stop maybe here or closer if you want. And yeah, just target the low hanging fruit. So yeah. Some really clean price action, but of course, yeah, could have been a better week if I just waited for the right time to trade and not take some stupid early losses and made some better decisions in general. But yeah, that's what trading is all about. We just constantly improve upon ourselves. I hope you enjoyed this video. I'm just gonna keep going. I think this is week 30 already, so we're already halfway through the year. I'm doing this already for a long time. And I'm gonna keep doing this until I made it. So guess how long is it gonna take? I don't know. Maybe another year, maybe another 2 years. I don't care. But I'm not gonna stop. So let's keep going. I hope this is a motivation for you to also keep on journaling, keep on reflecting in detail, because this is, like, I realize this is helping me so much on just journaling so in depth. Like, you don't really realize it, but it helps you so much to become a better trader. So whatever you're doing, just keep being at it. We're gonna get there, and I'll see you guys in next week's video. Peace out. Bye-bye.